So, it's interesting here, to bring a trading analogy. It's kind of like, sometimes you got to take a little heat. Sometimes you have to take a little loss on a trade, maybe size down the position to really get comfortable and let the winner run. Do you think the skills that you learn from playing chess continually apply to how you run your hedge fund and how you run trades and investments?
Absolutely, not necessarily in the way I just described. Like, you want to avoid sacrifices that don't work, particularly when you're investing. But I think in terms of several things. One is when you play chess and you're playing obviously to win, you want as many things going in your favor as possible. So, for instance, I want to have his king be exposed, but my king not be exposed. I might want to have a pawn that's called a pass pawn. There's nothing in front of it, so maybe it can queen. I might want to have an open file for my rook, or I might want to control the center. Ideally, I want to have all of these things. Now, in stock investing, it's the same thing. You don't want to have just one thing going for you. You want to have many things going for you. So, for instance, maybe I want the stock that I'm buying to have a low price-earnings ratio. That's one thing. Maybe I want it to have a lot of cash and no debt. That's another thing. Maybe it's ideal for me if Warren Buffett happens to own the stock and he bought it at a higher price than me. That's another factor. Maybe I want that the stock actually has fallen 10, 20% irrationally for some reason. That's another factor. So you want to kind of have this, essentially this confluence of factors come together to say, yes, this is the move I'm going to make. Same thing in chess. You want to have everything pointing to the fact that, yes, this is the move you're going to make, so that it's as safe as possible.
So statistically, you've kind of done your back testing, if you will, in both investing and stock playing. You have a scenario of moves in the game of investing and the game of chess that you're going through and saying, okay, if, like you said, this group of items are lining up and I've got a checklist of 12 of them and 8 of them are so, and I weight 4 of them differently than I do the other 8, then maybe it's time to put on the position, put on the trade, or maybe it's time to put on a piece of it and leg into it. It sounds very similar. I hear a lot of similarities between, again, that's giving up that pawn because I know what's going to come next. The next 4 moves I have in the game. Similar things happen when creating a portfolio. I think as a manager myself.
Yeah, I mean, it's very similar.
Okay.
So I just want to mention also with chess, there's another aspect which I find to be very similar to how I approached investing. When you're trying to get good at chess, it's not a matter of just simply playing a lot and improving that way. You have to really study. You have to when I was 17 years old, I probably ultimately accumulated more than 150 books about chess. And I would study every aspect of the game. So the opening of the game, the end game, when there's very few pieces left, the middle game when you have to study, what's called tactics or combinations and positional planning. I would study the games of all the world champions from the 1800s up till now, whether it's Bobby Fischer or Gary Kasparov or back to Paul Morphy in the 1800s. So so this way you become very familiar with every style. The way I approached investing was very similar. I've studied everybody from, I've read everything I could find about Warren Buffett or about statistical investing or about hedge fund investing, everything about arbitrage, value investing, growth investing, convertible arbitrage, merger arbitrage, investing in fixed income, investing in gold, silver. How do you take into account the interest rates in all the foreign countries to invest their currencies? So it's a similar type of approach. It requires years of study and studying of every aspect of the game.